Texas is about to experience the worst housing market collapse since the 2008 financial crisis. 27 cities across the state are showing the exact same warning signs that predicted the last crash, and prices are already falling. This video contains affiliate links. I may earn a referral fee at no extra cost to you, because these are the best tools in the industry. If you own property in Texas, you're thinking about buying, or you're sitting on the sidelines waiting for your moment, what I'm about to show you could save you hundreds of thousands of dollars, or help you make hundreds of thousands if you play this right. Today, I'm breaking down all 27 cities, the data Wall Street doesn't want you to see, why 2026 is the convergence point, and exactly what you need to do in the next 6 months. Let's get into it. Here's what's happening right now that nobody's talking about. For the last 3 years, everyone, real estate agents, mortgage brokers, even economists, told you Texas was bulletproof. People are fleeing California. No state income tax, business-friendly environment, population boom. All of that was true. But here's what they missed. Texas added over 470,000 new residents between 2021 and 2023. Housing prices in cities like Austin shot up 45%. Dallas-Fort Worth saw inventory disappear. Investors were buying sight unseen. It was euphoria. And now, it's all unwinding fast. Inventory is flooding the market in these 27 cities. Days on market are doubling. Price cuts are accelerating. And the exact same economic conditions that caused the 2008 collapse, over-leveraged buyers, speculative investment, artificial demand, are back. But this time, they're compounded by insurance costs exploding, property taxes skyrocketing, and a recession that's already started, but hasn't been officially declared yet. Most people won't see this coming until it's too late. You're going to see it now. Now, before we dive into the data, quick note for anyone watching this who owns investment property or is planning to buy. Do not put real estate in your personal name. You need an LLC for asset protection, liability protection, and identity protection. BuyZ makes this brain-dead simple. They handle everything. Registered agent, formation documents, EIN, compliance alerts, starting at $0 plus state fees. I'll drop the link below. And once your LLC is set up, the biggest mistake I see Texas investors make is messy bookkeeping and missed deductions, especially when you're holding multiple properties. That's where doula comes in. They handle bookkeeping, tax filing, and maximize every write-off so you're not leaving money on the table. I use them for my real estate LLCs, and they've saved me thousands. Link in the description. Now let's get into these 27 cities and what the data is screaming at us. The big picture. Why Texas is about to collapse. Let me give you the macro view first. Then we'll break down all 27 cities. Texas had the largest net population growth in the country from 2020 to 2023. Over 1.4 million people moved to Texas. That drove demand through the roof. Builders went into overdrive. Investors piled in. Prices went parabolic. But here's the thing. Population growth is now slowing. According to Census Bureau data released in late 2024, Texas population growth dropped 62% year over year. Migration from California is reversing. People are moving back. Why? Because the costs that made California unbearable, high property taxes, insurance, cost of living, are now worse in parts of Texas when you factor in property tax rates and homeowners insurance that's tripled in some counties. Add to that, mortgage rates still hovering near 7%, massive oversupply in suburban markets where builders overbuilt, commercial real estate carnage spilling into residential. Recession pressure is hitting the tech and energy sectors, the two pillars of the Texas economy. Now here's where it gets really interesting. I've analyzed listing data, price trends, inventory levels, and days on market for every major metro in Texas. 27 cities are flashing red, not yellow, not orange. Red. These cities fall into 4 categories. Overbuilt suburban sprawl, too many homes, not enough buyers. Speculative investment zones. Investors are exiting, no organic demand. Economically fragile markets. One industry town's vulnerable to layoffs. Luxury market implosions. High-end properties sitting for 200+ days. Let's go city by city. I'm grouping them by region so you can see the geographic pattern. Category 1. Austin Metro, the epicenter. Austin was the hottest market in America during the pandemic. Now it's one of the coldest. City number 1, Austin. Median home price peaked at $589,000 in May 2022. Today it's $512,000, a 13% drop. Inventory is up 110% year over year. Days on market, 68 days, up from 22 in 2022. There are entire luxury condo buildings downtown sitting 40% vacant because investors bought pre-construction and can't find renters at the prices they need to break even. City number 2, Round Rock. This suburb north of Austin exploded during the tech boom. Tesla, Samsung, Oracle, everyone set up shop. Population surged. Builders couldn't build fast enough. Now prices are down 9%. Inventory up 87%. Major layoffs at tech companies in Austin are just starting. When those workers lose their jobs, Round Rock is the first domino. City number 3, Pflugerville. Median price down 7.5%. Homes sitting an average of 74 days. For every house that sells, 2 more hit the market. It's a supply avalanche. City number 4, Cedar Park. Overbuilt and oversupplied, prices down 8%. If you bought here in 2022, you're already underwater after transaction costs. City number 5, Leander. One of the fastest growing cities in America from 2023. Growth has stopped. Inventory is piling up. Price cuts on 41% of listings. This is early stage collapse. City number 6, Georgetown. Retiree destination turned speculative nightmare. Luxury homes priced at $800K plus are sitting for 6 months. Nobody's buying. Sellers are panicking. Expect 15-20% declines by mid-2026. So that's the Austin Metro. Now let's head north. Category 2, Dallas-Fort Worth Metro, the bubble bursts. DFW is the largest metro in Texas by population. It's also where the most speculative money flowed. And now that money is leaving. City number 7, Frisco. Frisco was the golden child. Billion-dollar developments, PGA headquarters, luxury everything. Median home price hit $672,000 in early 2023. Today it's $618,000, down 8%. There are 14 months of inventory in Frisco right now at the current sales pace. A balanced market is 6 months. 14 months means prices are going to crater. City number 8, McKinney. Same investor-driven insanity as Frisco. Prices down 7%. New construction homes sitting empty because builders overshot demand by 3 years. They're offering $40,000 in incentives just to move inventory. City number 9, Allen. Affluent suburb, great schools, low crime, also overpriced and overbuilt. Median price down 6.5%. Days on market up 93%. It's going to get worse before it gets better. City number 10, Prosper. Tiny town that exploded into a sprawling suburb. Prices jumped 60% in 3 years. Now they're falling, down 9% year over year. Inventory is spiking. The speculation is over. City number 11, Salina. Population went from 6,000 to 25,000 in a decade. Builders built for 50,000. Prices down 8%. Listings up 122%. City number 12, Little Elm. Lakefront community that became investor heaven. Now it's investor hell. Prices down 10%. Half the homes are rentals, and rental rates are falling because supply is crushing demand. City number 13, Denton. College town. But the speculative sprawl spread here too. Prices down 5%. Not catastrophic yet, but the trend is accelerating. City number 14, Keller. Upscale Fort Worth suburb. Prices holding better than others, but days on market doubled. Sellers are stubborn here. They don't want to accept reality. By Q3 2025, they'll have no choice. Okay, that's DFW. Let's move south. Category 3, Houston Metro, the energy wildcard. Houston's economy is tied to oil and gas. When energy is up, Houston thrives. When it's down, Houston suffers. Right now, crude oil prices are unstable, refineries are cutting jobs, and the housing market is starting to crack. City number 15, The Woodlands. Luxury master-planned community north of Houston. Median home price, $525,000. Inventory is up 68%, and homes are sitting for 81 days on average. This is a wealth market. Second homes, corporate relocations. When the recession hits and companies freeze hiring, The Woodlands is in trouble. City number 16, Katy. Massive suburban sprawl west of Houston. Builders went insane here. Entire neighborhoods of cookie-cutter homes sitting empty. Prices down 6%. Katy ISD has some of the highest property taxes in Texas, so even if you can afford the mortgage, the $12,000, $15,000 annual tax bill is crushing buyers. Demand is collapsing. City number 17, Sugar Land. Affluent suburb southwest of Houston. Prices holding relatively steady, but days on market up 54%. This is a delayed crash. It'll hit in late 2025 when job losses accelerate. City number 18, Pearland. Prices down 5%. Inventory climbing. Energy sector layoffs will be the catalyst. City number 19, Cypress. Northwest Houston suburb. Overbuilt, oversupplied, overleveraged. Prices down 7%. Expect double-digit declines by 2026. Now let's hit San Antonio and the secondary markets. Category 4. San Antonio and secondary markets. The forgotten collapse. These cities don't get the headlines, but the collapse here will be brutal. City number 20, New Braunfels. Between Austin and San Antonio. Tourist town with a housing boom fueled by remote workers. That wave is over. Prices down 8%. Inventory up 94%. Houses sitting empty for months. City number 21, Shirts. San Antonio suburb, military town. When the economy tightens, military families stop buying. Prices down 6%. City number 22, Bourne, Hill Country luxury market. Prices spiked during the pandemic. Now wealthy buyers are gone. Homes over $1 million are sitting for 180 plus days. Prices down 11%. City number 23, Conroe, north of Houston, oil town. When the energy sector contracts, Conroe dies. Prices down 7%. Expect 15-20% drops by mid-2026. City number 24, League City. Southeast Houston suburb. Prices down 5%. Inventory climbing. Another delayed crash waiting to happen. City number 25, Midland. Oil and gas central. When oil booms, Midland explodes. When oil busts, Midland becomes a ghost town. Right now, we're heading into a bust cycle. Prices are already down 9%. By 2026, expect 25 to 30% declines. This will be one of the worst crashes in Texas. City number 26, Odessa. Midland's Twin City. Same story. Down 8%. Recession in energy equals collapse in Odessa. City number 27, Lubbock. West Texas. Cotton, agriculture, Texas Tech. Economy is fragile. Prices down 6%. This market never recovered from 2008, and it's about to get hit again. So that's all 27 cities. Now let me tell you why this is all happening at once, and why 2026 is the convergence point. Here's what most people don't understand. Market crashes don't happen overnight. They happen in stages. Stage 1, 2022-2023. Prices peak. Euphoria. Everyone thinks it'll last forever. Stage 2, 2024. Cracks appear. Inventory rises. Days on market increase. Media ignores it. Stage 3, 2025. Denial. Sellers refuse to drop prices. Buyers wait. Stalemate. Stage 4, 2026. Collapse. Forced sales. Panic. Prices freefall. We are entering Stage 3 right now. By Q2 2025, we'll be in Stage 4. Here's why. Factor 1. Mortgage rate lock-in. Millions of homeowners refinanced at 2.5 to 3.5% in 2020 and 2021. They're not selling because they can't afford to buy another house at 7%. But life doesn't stop. Job loss, divorce, relocation. Eventually, they have to sell. And when they do, there's no buyer at current prices. So prices drop. Factor 2. Investor exodus. Investors bought 30–40% of homes in these 27 cities from 2020–2023. They were chasing appreciation. Appreciation is over. Now they're bleeding cash, negative cash flow, rising insurance, rising taxes, falling rents. They're exiting fast. When investors dump inventory, prices collapse. Factor 3. Insurance crisis. Texas homeowners insurance has tripled in some areas due to climate risk, hail damage, and insurer exits. In cities like Frisco and the Woodlands, you're paying $5,000–$8,000 per year for insurance. That's $600+ per month. Buyers can't afford it. Deals are falling through. Factor 4. Recession officially declared. By mid-2025, the NBER will officially declare we've been in a recession since Q4 2024. Layoffs will spike. Tech, energy, finance, all getting hit. Unemployed people don't buy houses. Foreclosures start climbing. Inventory explodes. Factor 5. Builder desperation. Builders have billions in inventory they need to move. They'll slash prices to avoid bankruptcy. When builders drop prices 15–20%, existing home sellers have no choice but to follow. That's the final domino. All 5 factors converge in 2026. That's why it's not just a correction, it's a crash. Okay, so what do you actually do with this information? Depends on your situation. If you own in one of these 27 cities. Option 1. Sell now. Take your equity off the table before it evaporates. Losing 5% to a realtor is better than losing 25% in a crash. Option 2. Hold long-term. If you can afford the mortgage, taxes, and insurance, and you're not planning to move for 10+ years, ride it out. Markets recover eventually. Option 3. Convert to rental. If you have equity and a low interest rate, rent it out and relocate. Just make sure cash flow is positive after all expenses. If you're thinking about buying, wait. Do not buy in these 27 cities in 2025. Prices are falling. You will get a better deal in 12 than 18 months. Be patient. Let the crash happen. Then swoop in. If you're an investor, this is your moment. Start building your target list now. These 27 cities will have incredible deals in 2026, 20 to 30 cents on the dollar in some cases. But you need 3 things. Cash or financing lined up. Property management infrastructure ready. An LLC to protect your assets. This is where BZ comes in, link below. And once you start acquiring properties, you need bookkeeping and tax strategy dialed in. That's where Doula saves you. They track every expense, maximize depreciation, handle quarterly filings, and keep you audit-proof. I'll drop that link too. If you're on the sidelines, watch the data. Track inventory levels in your target cities. When you see 12+ months of inventory and prices down 20%, that's your signal. Move fast when that moment comes. The best deals get snatched up in 30 days. One more thing. Drop a comment below and tell me, which city are you in? Are you seeing this in real time? Are prices already falling in your neighborhood? Let me know. I read every single comment. Thanks for watching, and I will see you guys in the next one.